Welcome to our financial future. In this video, I'm going to go over why a stock might appreciate in value, how to spot good management and their decision making, an example of a dividend company and a dividend growth company, and a bonus at the end that will help you possibly sell a losing stock. So just because we're invested in a company doesn't always mean it's going to go up. There's actually times where a stock can drop 70, 80%. And even when you think a stock has gone down 70 or 80%, it might not go down more. Well, it actually can go down more. It can actually go down to 100%. So never get in that mind frame that you can never lose more on stock if it's already gone down. We're going to go over things that are must-dos when it comes to buying and selling a stock. One of the main things is, do we really like the company? Do we think it's going to be around for a long time? Does that company have good management? And do we just really see an overall future of growth with this company? Another great sign of a great company is one that you actually believe in, something that really rings true to you. But you also have to understand how the business makes money. And what I mean by that is the products they sell, the service they offer, and how they bring in revenue. As well, a company that is really changing the world. One of these companies is going to be a company that rings true to you. What I mean by that is it really inspires you, really catches your eye. And that might not be a stock for someone else. And I don't want that to discourage you, because this is the money that you are voting into this world. And your vote actually makes a difference in growing these companies. And it's something that you're going to get to see in the future more from that company if you invest in them. Don't worry if you can't find any of these companies right now, because you might be a new investor who doesn't even know about all these companies out there. So over your investing career, you are going to be able to find these companies as you improve your investing practice and become more knowledgeable. There are thousands of companies out there, and there's at least probably 20 or 30 that really ring true for you. So for example, for my own investing practice, I like to see a sustainable future, one that's going to run on clean energy. So this is a topic that I research, and it makes me feel good that where I'm putting my money is going to change the world. There is a really good chance that we're going to come across companies that we know very little about. This is what my channel is going to help everyone learn and build the community around, is you get to share your ideas with the community, and you might not think of something that someone else suggests, and this will help you create your story so you can better invest your money in these companies that you are interested in. When we do the research, the company keeps growing. Yes, we can't see 30 years into the future, but with the information that we gather, we can see at least 1, 2, or 3 years into the future. And as we go, we will keep creating that story, and that's what will impact our investing strategy. Usually one common thing about these companies that last 30 years is the management, and usually the CEO or someone that has created the company. And what they have is a vision. You have your Elon Musks, you have your Steve Jobs, you have your Jeff Bezos, and they had a very clear vision of the company. And this is what's going to help you decide if you should invest, because they will use their vision to help you with your vision. These types of people who are these visionaries actually take pride in being good people. And this is something that we want to spot as an investor when we are looking at management, is how transparent are they? And a word you're going to hear a lot is integrity to describe these people. If the company is not doing so great, are they trying to cover things up? Or are they being truthful and letting you know as an investor the information that you should know? We want to find leaders that design things like mental health programs for their employees, or put out fundraisers to help people who are less fortunate. These types of leaders are people that you and I would want to work for. So when we're getting into our investing practice, we will be able to find this information and see how they treat their employees. because good employees will work better and then produce a better company for us to invest in. For me personally, I like to look for CEOs and management who do net zero carbon emissions. And if there is no future world, then there can be no future companies. So this is a very important aspect. So someone like Bill Gates, who has an investment group called Breakthrough Ventures Energy, where you have names like Jack Ma, Richard Branson, Mark Zuckerberg, Jeff Bezos, Ray Dalio, all of these entrepreneurs who have made a large amount of money, this is where they want to put their money. This gives me an idea of where I could put my futures investments, and these are the types of leaders that I like to pay attention to. It might seem odd that a stock price could be influenced by these types of people, but it's the decisions that they make that really make the company and the share price go up. It's not only just a good CEO, but financials as well. You need a company that is going to grow revenue and grow sales, but at the same time, they have to stay out of debt. By lowering that debt and increasing sales, that's when stock prices really go up. A company with good financials will be trying to improve the company. This could come in the form of making acquisitions of other businesses, because other businesses will increase the revenue. They could be using that to expand into other countries like Europe and India, where there is a target market for their product. They could also use that money to acquire better workers, because better workers can produce more product, which gives them a competitive advantage over other companies if they can pick them up before them. The type of decisions that these CEOs make can really make or break a company. And it's not only the CEO that's making these decisions. There's something called a board of directors. And the board of directors are a group of people that come together and talk about the future decisions the company is going to make, and they all come to an agreement on what they should do. Now, as a shareholder, you will actually get some voting rights that can affect these decisions depending on the numbers of shares you own. I go over CEOs and management in other videos. If you're new to my channel, I have a free online course, go check it out. Hit the subscribe button. If you are finding this video useful and feel someone else could benefit from it, hit the like button and it'll help the YouTube algorithm and help that person find the video. Because the company has good management and has future growth plan isn't the only way to make money off the company or the shares. There's something called a dividend. A dividend is usually something that a good stable company will pay out if they have the extra revenue and they don't really have any future growth plans. Instead of trying to reinvest that money or put it in other avenues to grow the company, they will pay it out to the shareholders. Dividend paying companies usually pay out dividends every 3 months, which are known as quarters. And how you can look at it is if you had a $100 share price and they paid a 5% dividend, that means for every $100 share you own, you would get $5 a year. These types of companies are a good strategy to beat inflation, because remember, inflation is essentially lessening our buying power by 2% a year. And what dividend types of companies do are supply us with that income coming in where we can either reinvest that money or we can pull it out. I would suggest either reinvesting it back into the company, because then you can buy more shares that pay more dividends and then you'll get more dividends later on. And later on in life, if you have accumulated enough shares in a dividend company, you will be able to make passive income in the long run once you don't have to work anymore. But just because we are getting checks every 3 months or so, doesn't mean we should just go out and spend it. It can be very beneficial for us to use those dividends to compound interest. And there's also something called a DRIP, and that stands for Dividend Reinvestment Plan. And what you can do is automatically set it up where you can reinvest those dividends automatically, and saves you from trying to pull that money out. It's not only these companies that are really stable and slow growing that pay dividends. You can actually get some relatively stable companies, but actually have some future growth ahead of them. For example, they could pay a dividend of 0.5%. And this is because they are actually producing probably some technology that's going to benefit in the future, and they are seeing some growth. So they don't want to pay out a full dividend because they want to use that money to be able to invest in the technology that they are growing. A company that I personally follow called Teradyne. They make semiconductor testing equipment. And what semiconductors are the chips inside of your cell phones, for example. And the next wave of semiconductors about to come out are for the 5G technology. But as well, this company makes robotics. And for example, the semiconductor industry might be slowing down for them, but the robotics automation industry is going to start growing. And this is why they'll pay a 0.65% dividend, because they are seeing this future growth ahead of them and they want to be able to reinvest their earnings into those types of technologies. Now, there are a lot of companies that actually don't pay dividends, and these are companies that are actually expecting a decent amount of growth and don't feel that they should be giving that money to shareholders because they want to invest that money. That growth company that is still growing could eventually become a dividend company. There are times where it's going to come to the point where we might have to sell a stock. And this can be a couple of factors. We can have poor management. And management could be making decisions whether maybe they don't acquire a company on time or they acquire the wrong company. There also could be things like world events that changes the way the company operates. And we should be really aware of this when it comes to the stocks that we really want to own. Another way to lose money on a stock possibly is buying when the crowd is buying. And this is like a psychological thing when greed takes over and you have the fear of missing out. And how you could possibly lose money on a stock like this is if you follow the crowd and buy, then you are technically buying possibly a company that is overvalued based on a short-term mindset. And remember, we're having long-term mindsets here. So we have to reevaluate what is actually driving the growth of this share price and see if it's actually worth buying for ourselves. And if you get caught in that trap, that stock could go down and possibly lose you money. So let's recap this video just a little bit. So we learned about buying low and selling high and how to kind of figure out that strategy. We also learned about CEOs and management and how they make decisions that affect the share price and how we will have to reevaluate how we decide to input that in our investing practice. We also learned a little bit about the financial health and how that affects the share price. We also got into dividend paying companies and how growth companies don't really focus on paying dividends, but in the future they might. I really like to thank you guys for coming to my channel. If you found this very useful, hit the like button and subscribe for more videos like this. Thank you very much for coming by and have a great day.